Welcome to Mortgage Points and Nonsense. I'm your host, Bill Ladwig, and here's another in the continuing series based on the idea that the best consumer protection is consumer education. So what are points? Well, a point is 1% of a loan amount. 1% of a $350,000 loan is $3,500. A basis point, or BIP, is 1/100th of a point. BIP is jargon that you sometimes hear, and one BIP on a $350,000 loan is $35. Rebate is a lender credit. It is also called yield spread premium. And here's how rebate works. Here are prices for a 30-year fixed conforming loan from a lender's price sheet to illustrate the relationship between rates and points. Rates at left are increments of an eighth point, or 0.125. Most lenders offer approximately 10 rate point combinations for each loan type to provide borrowers the flexibility to buy rates up or down. Points are available for different lock periods, typically in 15-day increments. The cost increases for each greater lock period. Locks for less than 20 days are available only for loans that are fully underwritten and all prior document conditions have been met. This is true for all lenders. If you're rate shopping, insist the loan officer provides you with a benchmark 30-day quote. As you can see, the lowest rate has the highest points, and as the rate increases, the points decrease until our rebates shown in red. We have just begun pricing our loan. Next, the base prices we just saw must be adjusted for loan amount, property type, credit score, and loan-to-value, among other things. These lender adjustments have been copied directly from a lender's price sheet and are very typical for all conforming conventional loans. The largest adjustments are for loan-to-value and credit score. As you can see in this panel, the adjustments increase as loan-to-value increases and credit scores decrease. Using a 90% loan-to-value, prices for credit scores can range 3 points from 1/4 to 3 1/4. In this example, we use a 680 credit score that requires a 1 1/4 point adjustment. Let's also assume this is for a condominium, so we must add the standard 3/4 point charged by all lenders. Here are the net conforming conventional point costs for a $350,000 loan. After the adjustments, it looks like 4.5% is the lowest combination of rate and cost. If the borrower needs more help with cost to close, then 4 5/8 or 4 3/4 would work, depending on how much help is needed. Remember, this is only a snapshot in time. Points change every day, sometimes several times a day. So what is the nonsense part of this presentation? Well, zero-cost loans are nonsense. In fact, every time I hear zero-cost loan, my BS meter flies off into the red. There's no such thing. There are always loan costs. Loan costs are paid over time with a higher interest rate or immediately with lower rate and fees. In this case, we use a 4 3/4 rate to supply the largest rebate to cover as much of the closing costs as possible. The 1.489 rebate covered all the closing costs and even provided an additional $400 towards the prepaids and impounds. The point is that while they're not always disclosed, all the costs shown are always there, regardless of the lender, and must be paid in some fashion, either immediately in cash or over time with increased rate. While prepaids and impounds can be a substantial part of the total cost to close, prepaids and impounds are really money collected in advance for future payment. So, if you're fortunate enough to be in position to pay off a loan the week after you close, you'd be repaid most of the money spent on prepaids and impounds. Thank you for attending this presentation. You can contact me 24/7. Your advantage is my experience. You can also email me at bill@yourfhaguru.com. I'd love to hear from you and get your questions. My website contains other videos and additional information about home loans. In fact, it can answer just about any question you may have. Hope to talk to you soon. Have a great day.